Welcome to Markets Now. I'm Michelle Rook with Arlan Suderman with StoneX, and a mixed day in both grain and livestock futures trade. And let's kind of deep dive here. First of all, on soybeans, the update that we had here today, and really in soybeans, kind of all of the grains, has most of this been fund short covering? Has it been technical, or is this China business driving it?
Well, most of it's been short covering. If it's a bull market and the funds are heavily long, then your biggest risk is something coming along to surprise you with a bearish story that catch you on the wrong side. Now we're in a bear market and they were heavily short, and so they face that same risk. So they start getting nervous. We get to multi-year lows, start saying, okay, we're at risk of something unforeseen happening, be it in the Black Sea, the Red Sea, or wherever it might be. So they start taking some profits on that, lightening their positions. Momentum trading algos came in and added to the momentum to the upside. How far can we go? Do we go back and retest those lows? I think it's possible that we can do that depending on what we hear from USDA on Thursday. Do they come out with a very similar yield estimate to August? This will be the first estimate that's based on where they actually weigh field samples. That can lead to surprises. That is a big issue in a year when you have a very cool August, which we did until the end, but we also were pretty dry, particularly in some areas. That tends to favor lower surprises, lower yield surprises, how those balance out. So I want to see those numbers. And then we have to see if we can get those bushels all stored away without pressuring the market too much with forced sales of bushels. But I do feel better about these lows that we've put in than I did a few weeks ago.
Yeah, and as we go into the report, you're an agronomist, what are your thoughts? Do you think that we at least have trimmed the top end of the yield here in the soybeans or not?
Well, we definitely took some off the top with the hot, dry finish that we had to August, especially probably for soybeans. But how high was the top before that? Prior to that late month heat, it was a very cool, mild August. And historically, if we look back at the data, that favors large seed size and big surprises with higher than expected yields when the combines finally get rolling in September and October. So this year really doesn't have a precedent that's just like it that we can really look at. I think it's really going to come down to soil type and moisture holding capacity, whether you got the timely rain or didn't. I think some states are going to surprise us to the upside, some to the downside. But overall, I think when you add it all together, we're probably pretty close to where we're going to end up.
And of course, we've dipped down to levels that look like a value to China. We're starting to see a little bit business, but this is still pretty routine, isn't it?
Yeah, it's even less than routine right now. China would normally have a lot more bought before now than they did. In fact, they virtually have nothing bought for delivery in November. That's delivery to their ports in November and December, and very little for January or even for October. And so there's a lot of potential buying there, but they're really not doing it. Is that because they believe that lower prices are coming yet? Or does that mean, is that because they just simply don't expect to buy from us because they are going to lean on the reserves that they've been building out of Brazil and Argentina over the last 6 to 12 months? We don't have an answer to that. That's the big mystery here. But based on their slow sales pace to this point, we have to assume a lower export target than what USDA currently has until or unless we see that significantly change here pretty quick.
And there has been trade talk about South America, in particular Brazil, and some of the dryness there, maybe slowing soybean planting, maybe getting some logistics issues out of the ports. Is it too early to be concerned about that?
It is, and glad you brought that up, because normally in this type of environment, with questions about South America's crop, China would be very aggressively buying our soybeans, maybe under unknown destinations or whatever, and they're just simply not doing that at the normal pace that they would be. But when you look at the last 10 years in Brazil, the monsoon rains is when they start planting, when the monsoon rains return. And the monsoon rains have been late in like 9 out of the last 10 years. So it's a new weather pattern they now have in Brazil. If the monsoon rains would start tomorrow, they'd start planting by tomorrow afternoon. They're just waiting for those rains. And right now, the weather forecasts say it's probably not going to happen before the end of the month. But they've been consistently saying over the last 10 days that once we turn the calendar to October, those rains are going to start. Confidence is low that far out, but if that happens, the crops will be fine. And that will favor big crops in center west Brazil, maybe drier in the south of Brazil, maybe below trend yields there. But in similar type of years, we've seen the above trend yields in center west more than offset the lower yields in the south and give us a big crop. So we're probably looking at 165 to 170 million metric ton crop coming out of Brazil, up from about 149 to 150 this past year.
And the corn market just slightly higher today in Arlan. We got probably caught there between the higher soybeans and the lower wheat market. But that market, a lot of questions about whether we put the harvest low in there as well. What are your thoughts, especially as we go into this WASDE?
Yeah, the soybeans in Brazil, we talked about, the Brazilian farmer has caught up to his normal selling pace, about 20% left to sell as far as pressure on the market. It's a U.S. farmer now has all the beans. On the corn side of it, the U.S. farmer is still behind in his selling, and so is the Brazil farmer behind in his selling. So that makes it extra hard trying to sustain a rally. And we anticipate no matter what the final yield is, it's still likely to be a record crop and limited storage capacity once again. So that's going to make it tough going forward. Still possible the lows in, but sustaining a rally is going to be a challenge going forward. Now, long term, I feel much better about corn than I do soybeans. And that's largely because Black Sea's had a short crop. Argentina is going to be scaling back acreage, probably somewhere around 20 to 25%, going to soybeans, scaling back corn. All of that should support, depending on the size of Brazil's crop, should support our exports in the last half of the marketing year. So when we get last half of the marketing year, I think we could see some better price opportunities for corn. But in the meantime, it's really going to struggle, I think. And soybeans, longer term, we've got to have a change in the story, either on supply or demand, to change that picture.
Yeah. And funds have gotten out of some of their short position in both corn and soybeans, but we're running up into chart resistance now. So we're going to need something more bullish to get us through those areas. It's hard to do that with harvest coming around, isn't it?
Yeah, it really is. It's a tough time of year to turn that around. It starts with USDA, but then it comes down to actual harvest results and those bushels hitting. Farmers with low prices are going to want to dry the corn in the field, but the weather pattern right now looks to be seasonally warm with dry air that should dry down the crop pretty quick and facilitate a fast harvest.
Gotcha. Okay, the wheat market, a down day here today, although we've again bounced off of our lows there in that market. Has that market put in a low? Because seasonally, that's usually the first one to bottom, isn't it?
Yeah, and if corn holds its low, then wheat should be able to, because wheat really is showing that indication. Now, the problem is here, we do have some tighter supplies among the major exporters with a much smaller crop in the Black Sea region, and that's where the world's cash wheat prices are really set. And so the market wants to put in that low, expecting better exports, and I think we will see those better exports, particularly in the last half of the marketing year. But the problem is the Black Sea cash prices have not started to firm yet. The board has done so, pricing us back out of the market. While we had great export inspections today, that's from previously contracted wheat. We need to be careful about the wheat market getting too far ahead of itself while the Black Sea prices are still cheap with very strong export shipments coming out of that region.
So what you're saying is we're just teetering on not being competitive.
We really are, and it's a timing thing. And I think we need to give it some more time to work things out before we start seeing the more supportive wheat and then followed by that corn.
What about the cattle market? A nice recovery today after a down week and a pretty ugly technical week last week. So was this in sympathy with the stock market, or is this market anticipating cash is finally going to be able to bottom here?
The stock market certainly did help. We overdid the losses late last week. When you look at the Thursday and Friday of last week, live cattle, the front two contracts lost about $4 a hundredweight, feeder cattle about $6 a hundredweight. We did bounce today. The October live cattle contract held the August lows. That's a positive. but also we're seeing that the packers are seeming to indicate that they're a little tighter this week than what they were indicating late last week. Last week they were maybe buying, saying, oh, okay, we'll give you this at 181 with maybe 3 weeks of delivery time. Then this morning they're calling up and said, you know, maybe we need those cattle by the end of the week. So they seem to be a little tighter. Packer margins are pretty good right now. They're better than what you would expect out of a tight market overall. So I think the board, recognizing that, rallied today off those lows.
And technically, did we negate some of the negativity from last week or the technical damage that we did?
Some of it, but we haven't confirmed that yet, and that's going to be a problem. It's interesting to note that we look at last week's slaughter. It was down, about 17,000 head from a year ago in the holiday shortened week. I think it's about 542,000 head. And you look year to date, our slaughter is down about 4%. Steers down 1%, heifers down 2%. But it's beef cow and dairy cow down 12 to 14%. That's where our big decrease in slaughter is coming from, and why our lean meat market is so tight, but also why lean meat imports are really jumping as well.
All right, thanks as always, Arlan Suderman with StoneX, that is Markets Now.